This conference will now be recorded.
Okay, those who did this, in which company code you did? Can anybody tell me the company code? These postings are done in which company code?
LGIN, sir.
What is it?
LGIN.
You posted it today or yesterday?
Today, sir.
Today, okay. Let me take entry date as today. Execute. Okay, 1, 2, 3, 4, 5, 6 entries are posted with references FCV. Let's go to our Excel sheet first. How many entries we had? We had 6 entries, and even in SAP there are 6 entries posted. Now I want to pull out this information from the GL report. To take this information from GL report, we have to use FAGLL03 report. Let me open another screen. FAGLL03. Company code is LGIN. Now here the point is, I want to pull out only these document numbers, not the other document numbers. Okay, I want to pull out only these document numbers, for which I need to know in which GL account these entries are posted. To see that, double click on any one document. So here it is posted computers debit HDFC Bank, and for the other one it is FSV GL1, here FSV GL1. Okay, this is INR, fine. But why the other entries are posted in computers account?
First I posted in computers. Later I reclassified to this one.
Okay, reclass. Okay, fine.
Sir, sir, one doubt, sir.
Yeah, go
Hello.
ahead.
Sir, computer, if I am taking under group of asset, cost center will not accept inside, right? That's that one also.
Cost center it will accept, but it will not go to controlling module. But in the FI document, it will accept you to put the cost center. It will give you a warning message: do not assign any cost object. If you press enter, you will be able to still use the cost center for your balance sheet account.
So that error will be showing, but I change the expenditure.
No, that's a warning message. You just press enter, it will allow you to take cost center.
Okay, sir.
Okay. Now I'm taking this GL account, FSV GL account, execute. If I run this report as open, I got 6 I got 6 documents displayed. Out of these 6 documents, we are supposed to consider only the transactions which are posted in foreign currency, which means apart from INR, whatever the entries that are posted, we are supposed to consider them. So before we take this Excel sheet download, we need to ensure in this output you have got exchange rate field available. Let me check by moving a little right side. Let me scroll right. Here there is no exchange rate field. To add exchange rate field, you need to change the layout. To change layout, click on this, change layout. Here just sort this, go to exchange rate E alphabet, you'll get this effective exchange rate. Take this, I'll add this next to maybe before this, copy. Here you're able to see the exchange rate. Now I'll save this variant, save, continue. Now I'm going to take this information into Excel sheet download. To download the data into Excel sheet, I am going to click on option number 1, do a right click, click on spreadsheet. Option number 2, click on list, export, spreadsheet. On this pop-up, select option number 31, Excel, SX format. OK. I'll take download. I'll take the file name as Forex. Now this is how the data has been downloaded into the Excel sheet. It has got different columns because of subtotals that are applied on the Excel sheet, sorry, on your SAP. If you don't want like this different subtotals when you download, make sure on your SAP screen you click on this subtotal column. Go to subtotal. Currently there are different subtotals. You need to remove this. If you remove this subtotal, you will not get so many subtotals like you were getting before. Let me download this again. I'll close this sheet. I'll download this information. This time I'll do a right click, spreadsheet, OK. Same file name I am going to take Forex, replace yes. Now this time if you see there are no subtotals. In this you are going to concerned about exchange rate. Let me put columns in blue color, and document currency and local currency. Only the fields that are highlighted in blue color is what we are going to concerned about. Let me hide all the other fields. I'll hide these fields and I'll hide the other fields also. Okay, so that we can see only these fields. You are able to see exchange rate, you are able to see local currency, you are able to see foreign currency. Now from this, the first point that we have to remember is any document that is posted in local currency is excluded from foreign currency valuation. Straight away, entries that are posted in local currency, which is INR. Let me highlight this with yellow color, sorry, green color. I'll remove this total also. These two are the transactions which are posted in local currency, which we are not going to consider for foreign currency valuation. Excluding these two, whatever the transactions that are posted in your foreign currency is what we are going to consider for Forex valuation. How we are going to do this? We are going to do this for the month of May 2023. Let us check the dates in which this was posted. This was posted in the month of May only. Now in May month you have to consider the exchange rates that are updated in the system. To get the exchange rate, we assumed that we need to go to a table called TCURR, or in short TCUR. To open any table, transaction code is SE16N. Go to SE16N, input the table TCUR, and you need exchange rate for the month of May 2023. Exchange rate type that we are going to use is M, and from currency to currency is you want. From currency you have several currencies, but two currency is one, which is your INR, and valid from what you want is 31/05/2023. Is this correct? You want exchange rates that are updated from foreign currency to INR on 31st May 2023. I'm not giving any from currency, so that system will give me all the from currencies to INR on 31st May 2023. Pass this information, click on execute. When we click on execute, we are able to get only two records, AUD to INR and dollar to INR. But if you look at the transaction sheet, you have AED, USD, SGD, AUD. We have got four currencies, but on your exchange rate table, do you have four currencies? No, we do not have four currencies. We have only two currencies. AED to INR you have, USD to INR you have. AED, USD we have, but SGD, AUD we do not have. What we need to do, we need to update these two exchange rates on the system. How we are going to update these exchange rates? You will be using OB08 to update the exchange rate. Go to OB08, add a new entry. We need to update two records. I'll put two records valid from 31/05/23, and from currency, first one is what? SGDT, SGD and AUD. Two currency will be INR. Okay. Now exchange rates that we wanted according to our scenario. SGD is 62 and AUD is 51.50. I'll put this direct quotations, remove the spaces at the beginning, hit enter. So this is the decimal should be dot, put this, save it. Now we updated the exchange rate. Let us go to this table, taker. Currently we were getting only two. Now after we updating the remaining two exchange rates, let us refresh the table information. On the top you will find this icon called refresh. Click on this refresh icon. Now it has become 4. From 2 records it has become 4 records. Let us look at the exchange rates that are currently available. AED month end exchange rate is 20.50. AED month end exchange rate is 20.50, which is correct. Dollar is 79.20. Now dollar, it is not 79.20, it is showing as 95, which is wrong. We need to update dollar. Next one, AUD 51.50, SGD 62. 51.50 and 62, it is correct. The only change in the dollar. To change it, go back to OB08 once again. Go to position, pick up that exchange rate valid on that particular date. Exchange rate type M, from currency dollar to currency INR, valid from 31/05/23. Hit enter. You will get this. Here the current exchange rate that is maintained in the system is 95, but according to our scenario what we wanted is 79.20. Come here, change this to 79.20. Hit enter. Sorry, the decimal notation is different here. Save this. After saving this, go to your table, refresh the table information. Okay, if you refresh, now dollar to INR has become 79.20. If we check this information with your Excel sheet, let us verify if this information is agreeing or not. 20.20, you have got 20.20. 79.20, you have 79.20, 62, you have 62, 51.50, you have 51.50. When you perform foreign currency valuation, system is going to take the exchange rate from this table. You need to ensure exchange rate is updated properly, and you need to take the dump or download from this ticker table to ensure that the correct exchange rates are updated. Otherwise, the currency valuation which is going to happen in the system will be wrong in case if the exchange rate updated is wrong. Now, once we take this, what we are going to do in your Excel sheet, here I am going to put some other color which we are doing manually. Let me put yellow color. I'll put month and exchange rate. INR, this is not applicable. INR, this is not applicable. Here also not applicable. Now AED is 20.50. I'll take 20.50. USD is 79.20. Let me take 79.20 here. Next one, SGD and AUD. SGD is 62, AED is 51.50. 62 and 51.50. Right? These are the month end exchange rates that we have taken. Next one, what we did in the Excel sheet yesterday, same thing you'll have to do. But here what we are doing, we are taking all the numbers from SAP. We are not taking anything manually. Every number is coming from SAP system. Right? If you go to this, after MER, you put difference and Forex impact. Let me put difference. Next one, Forex impact. How did we calculate a difference? We calculated a difference based on okay, let me convert this exchange rate also into a number format. This is 1, this is 20, this is 80, 60, 50, and then this is 1. Okay. Now these we are not considering, so ignore these two first two. Now here you are going to calculate a difference, your actual or original transaction exchange rate minus month end exchange rate. This is what we did yesterday. If I do this, we are getting negative 50. Same thing you are going to apply here. Original transaction exchange rate minus month end exchange rate. Same thing. Original transaction exchange rate minus month end exchange rate. Here also same thing. Original transaction exchange rate minus month end exchange rate. This is the exchange rate difference. Based on the exchange rate difference, you are going to calculate Forex impact, whether you are getting loss or a gain. How we found out that? We found out that based on a formula called multiply your Forex exchange rate difference with foreign currency amount. For the first one, this is your exchange rate difference multiplied by foreign currency, which is 20,000 here. You got 10,000. Next one, exchange rate difference multiplied by foreign currency amount. Next one, exchange rate difference multiplied by foreign currency amount. Next one, exchange rate difference multiplied by foreign currency amount. This is how we calculated yesterday. And when you do a total, I'll put 0 here because it is not relevant. Here also 0. If your exchange rate difference, in short, your exchange rate forex impact is negative, is this profit or loss? If it is negative, what is it called? Gain or loss?
Loss.
If it is negative,
Gain.
this is a gain,
Profits gain.
right? And if it is positive, this is a loss. If it is negative, this is a gain. If it is a negative, this is a gain. Now, overall, if you look at this, you are getting 1,24,250. Okay, this is called as forex gain. Now, is this what we calculated manually yesterday? 1,24,250 gain. Same thing we are getting from SAP, correct? Whatever we did yesterday in the Excel sheet, are we getting the same thing from SAP figures? Or
Yes.
you found any difference? Let me take this screenshot. This is what we did yesterday. So, copy. Okay. Do you find any difference in the numbers or it is the same? One is from your SAP calculation which we did today. The other one is your manual calculation which we did yesterday. Is the calculation clear? How you found out the number from SAP? How we found out this number from manual Excel sheet conversion? Any doubt in this calculation? How we concluded that 1,24,250 as forex gain? Any questions? When you configure foreign currency valuation in SAP, the same thing is going to happen, same thing must happen. Which means when you practice or when you configure foreign currency valuation, you must know a proper or a practical business scenario. Once you've done your configuration, make sure you pass the same entries, and when you perform the foreign currency valuation, your forex impact must be the same number. Only if you see the same number, you are going to conclude that whatever the configuration you have done, whatever the entries you have posted, whatever is your understanding on this foreign currency valuation is correct. Otherwise, we will not be able to know whether what we are learning is right or wrong. That should not be the case. You must be convinced yourself first before you explain this to somebody else. Right? If you are clear, if you are convinced, only then it is possible for you to answer cross questions or to explain confidently to the other person. Clear? Any questions on this? Any doubt, confusion on this?
I have one
Sir,
doubt.
this part is clear.
Yeah,
But
Yeah.
sir, while creating the master data in FS00, in the control tab, there is a field called exchange rate difference key. So what is the use of it?
Okay. Any other questions meanwhile before I go to that screen?
the question on this screen OB08.
Okay. Just a minute. This one.
Yes, sir. Correct, sir.
So wherever you get any doubt that a particular field, what is the purpose of it, first thing that we will have to do is you have to press F1 on that key, so that you will get to know that field functionality by SAP. It is talking about key for exchange rate difference in foreign currency accounts. For the valuation of foreign currency balances, the system uses this key to find the accounts for gains and losses from the valuation. You specify which account valuation differences are to be posted to the exchange rate difference key in the system. Example, you could have valuation differences posted to the same P&L account for all the balance sheet accounts or to different accounts based on the currency. Normally, you have two approaches when you perform foreign currency valuation. This is not mandatory to be used when you want to perform foreign currency valuation. So when we do the configuration, that time I am going to explain this. If you go to SPRO, financial accounting, general ledger accounting, periodic processing, Valuate, you will find foreign currency valuation, and here you will find this field somewhere. What is this field? Exchange rate difference key. Not this one.
In valuation method.
Where is it?
Valuation method. Press F2, select any valuation method. F2, F2. Double click there. Double click. Exchange rate key down.
This one. Is this the same field? No, I don't think so. What is this field? Exchange rate difference key. Where is that field? Do you find that field anywhere?
Sir, I guess in the OBA1, I think the difference key is there.
This is your KURSREM. And what is this field? This is a different field. These are not same. Somewhere you will find that option. One sec. Cancel, yes. Go back. It's not here. Not here. Not delta logic. Normally we don't use this, but there is a different functionality in which you will be using this option.
So could you please go to OBA1? I think this
OB.
A1, sir. There is also exchange rate difference key is also there.
Second one.
Now KDB is used for non-open item GL account. Let me open this.
Inside first field.
Okay, this is blocked. Exchange rate difference key. Right, so here it is updated. This is normally used for non-open item GL accounts. If you are using GL account as open item, you will be updating under KDF. But if you are using a GL account as non-open item, but still you want to still you want to perform currency valuation for it, then you'll have to update that GL account in KDB. This KDB, when you are performing, inside this you are going to update one exchange rate difference key. This exchange rate difference key you will have to put here for the balance sheet accounts which are not open item managed. Clear?
Sir, could you please repeat again, sir?
Okay, so we assumed that foreign currency valuation is performed for the balance sheet accounts, correct?
Okay, sir.
In balance sheet you have open item accounts, non-open item accounts.
Correct.
Now if you are evaluating any particular GL account, in short any particular balance sheet, you are able to, or you are finding out what is the outcome, whether you are making forex gain or forex loss, correct?
Yes, sir. Yes, sir.
Now when you get this forex loss or forex gain, this is a financial impact,
Yes, sir.
right? Now to record this financial impact, you need to pass an accounting entry debit and credit,
Correct, sir.
right? Now when you pass the accounting entry debit and credit, you'll have to maintain the account determination. If I am valuating GL account X, if on the X GL account if I get profit or if I get loss, on which P&L accounts I have to take this impact. This is something that you are going to update. This GL account determination is different for GL accounts that are maintained as open item management, GL accounts that are maintained as non-open item management. If you maintain a particular GL account as open item management, let's say if this tick is enabled, for those GL accounts we are going to update the account determination in KDF, exchange rate difference open item GL account. Okay, you are going to double click on this. You will add a new entry. You will put that respective GL account. Let's say this is the account. I'm not updating this currently because we are yet to do the config. You are going to put this. You will leave the currency type blank so that this is applicable for all the currencies. Next one, you are going to input forex loss and forex gain GL accounts. This is your realized GL accounts, actual settlement. But if you want to capture the foreign currency valuation, you have to pass the GL accounts here under valuation. This is your foreign currency valuation account determination. Here you are going to put unrealized valuation loss account, unrealized valuation gain account. Similarly, balance sheet adjustment account. This balance sheet adjustment account is supposed to be the same GL account. If this is the account, the same account will be updated here. And here, valuation loss, valuation gain. In short, unrealized loss, unrealized gain. This GL account determination you will be doing for open item management. Is this clear?
Clear, sir. Clear.
From here, system is going to pick the GL accounts to pass this forex gain or loss when you perform foreign currency valuation. On the other side, if your GL account is non-open item, the GL account is non-open item, you'll have to pass the account determination settings under KDB transaction. When you double click on this, okay, you'll have to put one exchange rate difference key. This is, let's say, 1 2 3 4, any 4 digits of your choice. I'll put, let's say, LGIN. Okay, now I'm going to put expense account. Okay, I'm going to put expense account, which is nothing but your unrealized gain account. Sorry, unrealized loss will be your expense account. Your exchange gain account, this is your unrealized gain account. This is rolling valuation, we will not be using this. This is rolling valuation reversal. Reversal? No, not reversal. Revenue account for gain from rolling valuation. So you are going to pass expense account and income account here. In short, unrealized loss, unrealized gain account here. Now, what you are going to do from this is, if you put LGIN here, and here if you put LGIN, for all the balance sheet GL accounts which are non-open item managed, you are not going to maintain the settings in this account. Because are we able to put GL account here? If you look at this, let me open OBA1 once again. KDF. Right side, whatever you are seeing is the account determination for open item exchange rate differences. If you are maintaining GL account as open item, for every GL account you have to maintain the account determination. This is GL account specific. If you have 100 open item GL accounts, you will have to maintain this setting for 100 GL accounts. Clear? In case of open item, yes, if you have 100 GL accounts, you'll have to maintain settings for 100 GLs. On the other side, if you have GL accounts for balance sheet which are non-open item management, for those you are going to update the exchange rate gain or loss based on exchange rate difference key. At this key level, you are going to maintain gain loss account. For all the GL accounts in FS00, you are going to update that here. If I put, let's say, let me save this, I'm not maintaining any GL account. LGIN is what I put. If I put LGIN, is this coming here?
Yes, sir.
Alright, if I put this and if I save it, when I perform the foreign currency valuation, if I select this GL account, system knows this GL account is a non-open item GL, so it is going to valuate on the balance, on the closing balance. It is not going to evaluate the respective line item. Let's say, if you look at this currently, it has considered the forex gain or loss at each line item level, correct? For this line item, you got 10,000 gain. For the second one, 14,000 loss. Third one, 66. Fourth one, 62. This is your open item management forex valuation. In case if you are performing forex valuation for a balance sheet account, system is not going to go by the line item basis. It will simply take the total closing balance at each currency level. So it is going to perform the forex valuation at this closing balance level. Clear?
Yes, sir.
Right, when we do it actually on the system, you are going to understand in detail, because it is not mandatory to perform forex valuation for non-open item management GL account. It is used exclusively for the open item GL accounts.
Sir, we
Okay.
got the meaning of open items, like open item items, but open items, what are these accounts, sir?
Open item can be any GL account. It depends on your business requirement, which account you want to treat as open item, which account you do not want to treat as open item. There is no hard rule that you have to use these kind of a GL accounts as open. Any GL account that you want to clear, that you can create as a open item. In short, any current asset related, current liability related. In short, the GL accounts which are subject to payment, the GL account which are subject to receipt. You want to track if there is a liability, whether this liability is cleared or not. Similarly, there is an asset, if this asset is cleared or not. To track at that level, you will be creating open item management.
Yes, sir.
Okay, in short, current
Partial
assets, current
payments,
liabilities.
sir, partial payments made will also be considered under foreign currency valuation.
Yes, any partial payment is a straight away open item.
It will be considered under foreign currency valuation when we do month end
Yes,
process.
yes, it will be. Because when you run the GL report or any account report, let's say on a particular month end, now you are going to run the GL account like this on the particular month end, let's say 31st May 2023. If I execute, this is open item symbol, correct? Whatever the line
Yes.
items that system finds here, at every line item it is going to find out forex gain, forex loss. It is not going to check whether this is partial payment, invoice or payment, credit memo. Irrespective of the nature of transaction, at each line item level system is going to perform forex valuation.
When we do the actual payment, will system consider, sir?
When you do the
Realized
actual
gain or loss?
payment,
Will
yes,
system consider this
if there is exchange rate difference, yes, system automatically picks that.
for partial payment also?
Yes. For partial payment, you mean to say?
Yes, sir.
For partial
While
payment, it
doing
will
the
not
actual
take.
payment.
It will not take for partial payment because partial payment is not a clearing entry. Your realized is only considered when you are doing the settlement or clearing entry. If I am passing a 1 minute, let me put this here. Let's say I have an invoice. I have an invoice for 10,000. Clear? Now I received a payment. Something is wrong. Just hold on. I received a payment of 2,000 or I made a payment of 2,000. Now system is not going to consider the exchange rate at the time of this payment because you're not settling it. Are we clearing this 10,000?
No, sir.
We are not clearing this 10,000. So system is going to consider only if you are clearing this transaction completely. Clear? Only when you are
But
knocking off, when you are removing the transaction completely, which means from the open item to cleared item, when you are converting, at that time system is going to check what is your total open item debit and what is your clearing credit, and it is going to check the total based on the original exchange rate and the current exchange rate. You got my point? No?
Got it.
Sir,
You
what
didn't
if
get it?
it is real payment instead of
What
partial
about?
payment? If it is a residual payment instead of partial payment.
Residual payment I have not tried. That we'll have to test. Normally residual payment
But
is not recommended. We don't use it. But
but we
let's
have the
test.
option. In the global parameters, we have this option indicate currency differences for partial payment. What does that mean? Not there through path. Financial accounting, global parameter, global parameters for company code. Third one, currencies.
In currencies?
May indicate currency differences for partial payment.
No, I've not used this. Let's see this. You indicate document type, it will allow you to periodic related this. When partial payment in foreign currency is posted, the original exchange rate from the invoice posting date is compared with the current exchange rate. Any exchange gain losses are calculated and posted immediately in the document. Okay, if you want to consider partial payment for exchange rate differences, you'll have to enable this setting. But so far I've not used this anywhere.
Okay.
So for you to use this, you'll have to pick the respective payment document. If you are making the partial payment, if it is customer, whatever the customer payment document you have, let's say DZ, you'll have to take this for DZ. If you are planning to do it for vendor, you'll have to put this for KZ. Then you'll have to perform partial payment. You have to check if you are getting the exchange rate differences or not. But we have to thoroughly test these kind of things. We have to thoroughly test these kind of things, whether this exchange rate difference is coming to the extent of your partial payment.
Okay.
Right? If your invoice value is 10,000, you are trying to clear only 2,000. Your exchange rate difference is supposed to be only to the extent of 2,000.
Yes, sir.
Correct? You should not take the complete invoice amount and then take the exchange rate in a different way. So these kind of things, whenever we are using, not only for testing, even when you are in a project, we have to perform thorough testing. Only then we will have to propose to the client that this is how this works. First of all, we have to make sure we are clear with the functionality, what is happening with us. Okay.
Okay. Thank you.
Yeah. Save changes. I'm not changing this because this is a global level change. If you put this, this is applicable for all your company codes.
So on T code OB08, so
Okay.
OB0, so here we are maintaining the currency for all the document currencies. What are so company having the local currency INR and group currency USD, but the document currency may post in different currencies, right? THB and ZAR, AUD, AED. So for all that, we need to maintain the currency here, right? In this T code.
Correct.
So
Yes.
so so this need to be maintained for all the days. So this is maintained by end user for all the days, or it's how we are maintaining in this screen.
Normally, in majority of the clients, in majority of the companies, they don't maintain this on a daily basis. They follow month-end exchange rate. In short, average rates. Let's say now you are in the month of May, correct? Huh?
Yeah.
Now the entire May month transactions will be converted based on April closing rate. Whatever the exchange rate you had on 30th April, that exchange rate is used for all the transactions that you are performing on May 2023. Once your May transactions are completed, which means your data entry is completed for May 2023, that is when you are going to freeze the data entry, you are going to perform month-end activities. Am I correct?
Yeah. Yes.
Now, once you freeze the data entry, when you are starting to perform month-end activities, as a first activity, what you are going to do, you are going to update May closing rate, because May month-end activity is performed in the first week of June. Is that right?
Yeah. Yes. Correct. Yeah.
Right. So May
Yeah.
month-end rate you are going to get on May 31st around 4 o'clock or so, once your bank working hours are closed. Is that right?
Yeah. Exactly.
Now, the day when you are going to perform month-end activities, on that date, you are going to update 31st May 2020 closing rate, 2023 closing rate. Once those closing rates are updated, you are going to perform foreign currency valuation. Now, you know, during the month of your May, all the transactions are converted based on April closing rate.
Mm, not sure.
Okay, so during the May month, whatever the entry that you posted would have been converted according to previous exchange rate, which is April 30th.
Yeah.
Now,
While
once you
posting it.
update, right, once you perform the month end activity, which is your foreign currency valuation and foreign currency translation, system is going to reevaluate all the foreign currency transactions or all the exchange rates that are posted according to the May 2023 rate. So it will regularize every transaction conversion according to May 2023 rate. So any exchange rates that you are getting will be posted to Forex gain or loss.
Okay. So in that 31st, what we are updating, there will be a slight difference in currency. It may be
Yes,
higher.
there will be difference. For sure, there will be difference. Unless
Okay.
in some currencies you have some pegged currencies, right, wherein the exchange rate is fixed irrespective of the market conditions.
Okay.
Right? Otherwise, there will be some minor fluctuations. These fluctuations will trigger your Forex gain or loss.
Okay. So, so normally this setting will be done on the start of the company creation, right? So on the other valuation on the GL accounts, everything done by the user. So what type of the ticket which come to the as a consultant, what we need to, we are already updated the currency and month end currency also we are updating in June 1st. So if there is any difference that the amount, the valuation is different, so that's a part of user, right? So what ticket comes in a foreign valuation?
If you get any ticket on this, so this may be purely related to the numbering. They might say that our Forex loss or our Forex gain amount that is posted in our PNL is wrong. When they say that our calculation or the PNL impact that we've got is wrong, they're not going to tell you what is wrong. They are only going to tell that system has posted incorrect impact, due to which our PNL is showing a negative impact. We want to reverse this, we want to rectify this. Now they will ask you to find out what is going wrong, from which GL account or from which transaction I am getting huge Forex differences. Now, as a consultant, you have to log into the system, open the Forex valuation that the user had executed, find out why that number system had calculated on what basis. Because your user is not going to blindly go ahead with the number that system has proposed. Clearer? Your
Yeah.
users will have their own calculation.
Hmm.
And for every number, they will check whether, okay, I have, according to me, I am supposed to get let's say if you see this, you got 1,24,250 gain. Your users or your client, your business will know that approximately we will get around 1,20,000 forex gain this month. If it is
Okay.
approximately that figure, they will be fine with it. Minor differences, nobody is going to concern. If it is not 1,24,000, but if it is showing, let's say 80,000, or if it is showing 1 lakh only, so 20,000 matters a lot for them in the PNL. So they are going to put a question mark to rectify or to ask for a clarification. According to our calculation, our forex gain is supposed to be 1 point or 1,24,000, but system is calculating less or it is calculating more. They will ask your opinion or they will ask your advice why system has calculated incorrectly. So at this level, you must be in a position to go back to the foreign currency valuation which user had executed and open the GL account report on that particular month, take the download, do a manual calculation, find out which GL account is causing the difference. Because they will have their workings, you will have to talk to them, get into a call, understand on what basis they are telling they are supposed to get some X number. Now when you get these kind of things, your email communications are not going to help out. No other go, you have to get into a call or you have to get into a meeting.
Direct to the end user.
Yes, direct to the end user. End
So
user
in this,
or their manager, somebody. Yes.
so if they are, if it's for this 124, it's for us, we are getting 324 like that amount, that it tells that we are using the wrong currency rate, right? While updating in 08. Because of the wrong currency rate, there is difference in the calculation to the wrong amount.
That is one reason. There may be one or two transactions posted after performing foreign currency valuation, or there may be a GL account which is not included in foreign currency valuation.
Okay.
Okay, you can include, you can exclude certain GL accounts from the currency valuation. Okay, not everything you can include and exclude because this is subject to audit. Because at the end of every year you are going to have external auditing.
Yeah.
Right, in the external auditing, this is one of the checkpoint. They are going to verify whether your currency valuations are performed properly or not. They are going to check all the GL accounts that you are valuating. Your auditor also is going to calculate. If you tell that we've got 1,24,000 forex gain, on what basis, from which GL account you got this gain? Can you give me the list of GL accounts in which you had this forex gains?
Okay.
Right, so we cannot left and right play with this. You have to be very, very clear and careful with what system is doing, whether the entry that system has posted is correct or not. Clear?
Yeah, clear. So here we are manually just we are updating currency 806940, but in real time this currency will be given by client or based on the other third party software we need to check and update in SAP.
This exchange rate is fixed every month. So whatever this is market rate, right?
Yeah. So based
You
on
check,
what
either they will follow this. There are different RBI websites, right, to find out the exchange rates. Even in bank websites, you will come to know the buying rate, selling rate, and then the average rate.
okay.
So that monthly closing or average rate is what they are going to consider, and this exchange rate will be approved by the management to update in the system.
Okay. So we will be receiving the exchange rate that need to be updated for particular month by the user or from our side.
No, this exchange rate is not updated by the consultant. This is updated by the end user.
Okay. Okay.
Okay.
Yeah. Thanks, Ajay.
Yeah. Okay. Any other questions in this? Alright, if no other questions, fine. Make sure you're able to post these entries and you're able to calculate the number the way we've calculated in today's session in the Excel sheet from SAP. Clear?
Yes, sir.
Once this calculation is clear, doing the configuration, performing the foreign currency valuation is maximum 1 hour activity. It is not going to take more than 60 minutes. So don't focus on your configurations. That is a simple, straightforward. But instead, we have to focus on the logic, concept, whether we are clear what is going to happen in the system with this or not. Clear, right? Make sure you pass the entries and you are able to get the forex loss gain according to your calculation. And when you perform the configuration, when you run the foreign currency valuation, system is going to do the same thing. It will give you exactly the same number. If the same number is not coming, then something is wrong with your configuration. Am I correct? According to accounting, is this correct? Is this number correct according to accounting?
Yes, sir.
Right? When you perform this in SAP, you are supposed to get the same number. If the same number is coming from SAP based on your config, then there is a problem with your config. Something is wrong with config. Somewhere something we are missing. We have to ensure your configuration is properly maintained to verify that the exact number is coming. If it is the different, you'll have to verify your config, check where we are going wrong, what method we have to select, how system is calculating number, what is our requirement, what exactly system is doing, where we need to change. These points we will have to understand from the system. It's not that you configure, you run one time and you understood the config. That is not going to help you when you are in the project. Clear, right?
Sir, I have a request, sir. You must have planned something for tomorrow's evening class. But if you have not planned anything, then sir, could we learn the withholding tax? Just because on all the topics we have at least basic idea, but this is a topic that we don't have anything, sir. And this is an unavoidable topic as well. So we must get these questions. So
Which one?
may not be
Withholding
tomorrow,
tax.
but withholding tax.
Yeah, we are going to cover all these
Maybe tomorrow or
topics
maybe
practically. Yes, we are going to do it in this
yes.
week.
Thank you, sir.
Okay, in the evening sessions, we are not going to do any configurations. We are only going to understand the concept and different key points. The detailed configurations is what we are going to do in the morning sessions, not in the evening. Evening, we are only going to understand to ensure that you are able to speak out on the topic and you are not confused on the particular topic with some practical examples.
Yes, sir.
Okay,
Hello, sir.
all right.
Yes, sir.
Hello, sir.